So, who wants to have a trading strategy made by ChatGPT that makes $100,000? Well, I certainly want to have that. And according to the title of this video, ChatGPT made one. So, let's find out what the strategy entails and if it's also profitable when I use it with trading cryptocurrencies. And watch the video until the end, because with a few adjustments, I made this strategy perform even better. In this video, the presenter asked ChatGPT to create a trading strategy based on the VWAP indicator that would make her $100,000. And although there were some development iterations between her and ChatGPT, eventually they came up with the following trading rules, which are super simple to follow. It is a trading strategy for both long and short trading, and in this case the TradingView VWAP with period is used. The entry rule for a long position is to buy when the price crosses above the volume-weighted average price. Now the entry rule for a short position is to short when the price crosses below the VWAP. Profit will be taken when there is a 3% increase in position value, and the stop loss is when there is a 1% decrease in position value. And this is basically it. These are all the rules. Now if you follow my channel, you should know by now that I always want to test out these bold claims about having found a successful trading strategy. And I test these strategies out by creating code in which the strategy rules are hard-coded, so that I can do automatic backtests over a large dataset, multiple crypto assets and multiple timeframes. And this way I can create a reasonable objective measurement about the hypothetical performance of a trading strategy in a backtest. And this should provide me with a good indication about the trading strategy's actual performance in real market circumstances. So, I coded these simple rules into an algorithm and ran it through the Fractrate backtesting engine to see if it is a really $100,000 trading strategy, as suggested in the title of the original video. Now I don't want to shatter anybody's dreams, but I do want to protect them from having nightmares, so therefore sometimes I have to bring bad messages. And in this case it is a really bad message, because unfortunately the trading rules that were presented in the video made the backtest end up with a loss. Only on the 15-minute time frame this strategy performed the best, however it still ended up with a loss. Now it could be that this is caused by the date I started this backtest, because at certain times the strategy actually did perform pretty well, especially when there are high bullish circumstances. But when the bears return, this strategy starts to lose money badly. So to make a video that presented with the title that AI made a $100,000 trading strategy is somewhat misleading, even when in the video at some point there is said that it actually didn't make any good profits. So why present it without any question marks, or just say that you asked to make it a $100,000 trading strategy but didn't get any? Now I do want to give this video a positive ending and want to present you with a trading strategy that does make you potential money in the crypto market. So I analyzed why this initial trading strategy made such big losses and added the following alterations to the trading rules. First of all, the stop loss and ROI are set way too tight, so I gave the trades more room to breathe after entering the markets while still keeping the risk to reward settings 1 to 3. Next I added the RSI indicator and stochastics RSI. Firstly because I want to go only long in bullish conditions and short in bearish conditions. The price also closes sometimes above the VWAP when the markets go down, and I do not want to enter long trades when I know that these will end up in a losing position anyway. This way I will make the strategy enter the trade when the price has a pullback to the VWAP and then gets more momentum again when it wants to proceed in its original bullish or bearish direction. Again, there are no additional exit conditions set except the take profit after 30% profits or a stop loss after 10% loss. And after testing these additional conditions, I have the following results. Now the strategy has a huge improvement in performance with a 178% profits on the 1-day time frame. The 15-minute time frame seems to be a too small a time frame to make this a profitable trading algorithm. Although the win percentage is not that great, it is reasonable compared with trading strategies that are more focused on trend trading than on scalping. And this is also visible in the Kalmar, Sortino and Sharpe ratio. They show all positive numbers about this strategy. And also the experienced drawdown in the strategy is only around 27%, which is even better than most trend trading strategies that I tested so far. Finally, the amount of pairs that respond positive is also 69%, so most of the 50 pairs I tested respond positive to this strategy. Now on this chart we see how the equity curve looks in relation to the winning and losing trades. Here we can see that the equity curve is a quite spiky one, and we already know that there were more losing trades than winners. But what's more interesting is to know which exit reasons are happening the most and which of these causes the most losses in our trading account. Now, these pie charts show the division of reasons of trade entries, and here there are more trade entries when the close is above the VWAP, so more long trades than short trades. And in this pie chart we see that almost 70% of the exit reasons are caused by the stop loss and only 38% of trades is exited by take profit. And this is interesting information because it appears that hitting the stop loss is still happening too much, even though the space between entry and stop loss has been widened. Another very informative chart here is the signal and profitability plot. Here it appears that going short causes the most profits and the close above VWAP is not as profitable as one might think at first sight. Also, this chart confirms that the ROI is the exit signal that causes all the profits, which is logical of course because I have not configured another exit signal here. And hitting the stop loss too many times is the cause of all these losses. Now I can scroll over all these other charts and analyze them one by one to see if I can tweak this strategy even more. But at this moment I know that even though it's a profitable trading strategy, there are still many improvements to add before we can actually speak of a high probability winning trading strategy. More attention should be given to advanced and timely exit signals so that the stop loss will not be hit that often and we will preserve our gains. Another additional confirmation signal can also be added to create high probability entry signals, but not too many because that would make this trading strategy too complex to follow and maybe also too specific to certain situations, which leads to curve fitting bias. But my main conclusion here is that the title of the original video that eventually got me triggered to test out this trading strategy has put me on the wrong foot and I really thought this was a $100,000 trading strategy. But we can conclude that this is actually not the case and these YouTube titles should actually be read with high skepticism. So I hope you liked this video and learned something from it, and if you do, then please click like and subscribe to the channel. If you have seen a video with a trading strategy and you think this is worth testing, then add it to the comment section and I'll try to test this out. For now, this is it and I will see you in the next video. Goodbye!